G'day Trader Sam here. Here to give you another daily update on Bitcoin. I did one yesterday, I believe, giving some perspectives with using FibFan. Today I'm just going to do the two things that are Fibonacci based and just standard technique. And I believe using Elliott wave, that is wave 5. Just by doing this, let's just put that out there. This is acceptable, where we do from the bottom, swing high, swing low, and we get the one, and it's perfectly on it. The other way of doing it is doing this, which is based on the one Elliott wave and 1.414. So those are the two things that will really stand out for me. And if you look at it closely, there's a lot of confluence in price behaving around these Fibonacci's. We have this macro trend line, and if you include that wick, we have some time, but I dare say that this is going to be heading down to this level. This is going to be an important level. Like I said the other day, I do believe this is going to come down, and I'm still pretty bearish. This trend line, anyway, let's look at it from the Elliott wave count. If this is a wave 5, then we need a correction wave. Is it an ABC? What kind of ABC is it going to be? So this is wave 5. I'm pretty confident with that. The ABC could be 3 versions, and those that know it and those that don't, I'll tell you what, those that don't know it, you have for wave 5 count, then you have a mild ABC, could be just like that, where it can just hold its spot and then go. The second one, we already got that rejection. The second one could be further down. That is our top, that is our bottom recently, and we do that. So it's fair to say that 1.618 could be a target for this swing move. And if we look across, there's some reasons for it to be smack bang in the middle of the point of control. So if we were to apply our point of control on this level here, it is right there. There you go, 1.618. So this is going to be an important level. We have this as a point of control, I believe. No, didn't have it there. For some reason I had it there before. But that line is important. Let me just label that. One level of interest that I think it's going to be a mild one, but I think it will go to the 1. 1 is further down, and now it's still not enough. I'm going to talk about this a bit later. Okay, so that could be, and then there's a real deep pullback, which is a wave 5 count. So if it's a deeper ABC correction, then it's a wave 5 count, and that is going to be the likes of revisiting the lows, or even further down. We're going to trade it short term. Short term, I'm bearish, and let's have a closer look on the 1 hour. So daily levels, weekly levels, point of control, naked point of control, and so on. Now when we look at this level is going to be significant resistance already. Okay, and I'll add in the liquidity of recent. So if you look at this liquidity chart, you can see that the lowest liquidity level is down here. And I'm going to give you what I think is likely to take place. What's another chart's been telling us that every time prices dropped, something like this, there's a lot of longs coming in. And when there's a lot of longs coming in the order books, it's a bearish sign, because what they do is they want to get it. So if there's a lot of volume, a lot of liquidity there, with longs. Bearish because because they come and get it. Here we've got a lot of longs as well. I entered this swing failure pattern. I actually entered that one, got stopped out, and then entered this one and took some profit. So still in the profit, but my stop loss is further down, and what I'm expecting here is potentially a rejection. If it's a strong rejection, it's good to go short, and this liquidity is still here, so it might swing and then potentially go back up again. There is that chance that it could keep going down. So that's on the books. That's definitely there. So the liquidity bucket's there. So when we look at this, I had these planned out. So we can look for short term. This is what we're looking at, in my opinion, bearish. If we swing high, and there's a level here, if we go above that for whatever reason, and then comes back down and drops below that, I will short. This could be a shorting position, come back down, and this could be a short position if it goes up and back down again. So this is what I'm having. Now if this comes and then bounces off, then great, don't short. But if it goes below it, definitely short. And then we'll look for the swing failure pattern potentially here, because like I said, the longs, there's a lot of longs that went in there, and yep, a lot of shorts came in there, but the momentum's to the downside, so I can't see it coming back up. Now what we see here, until we change this, these are lower highs. We need to see a higher, we need to break that previous one, and it's unlikely. So pretty bearish, still looking for further downs. Now what downs are we looking for? Then we have this one here. Let's see, where is it? Damn it. So what I'm looking for is this one here. It's most likely, so we can play it the way I said it is, for short, and it eventually might just descend. And look at the Dixie as well, and see how that's aligning, and the SP500, see if that's going bearish as well. I am looking at the US tether, and that's not looking good. I'll show you after this. So I'm not interested in taking anything around here. You can see why. There's nothing there really. So this is likely to drop hard and then come down to this level. There's liquidity here. So, and we got our weekly level. So if price comes down, takes this out on the weekly level, and then goes back up, gains that daily level. I think it's a daily level there. No, it's that fib. If we can break above, it might just bounce very strong, and that's definitely a level. Now this is where it comes down to. If it drops hard, and that's going to be a significant drop, guys. This might be a real good trade, 12%. If it drops hard, you will see a strong bounce, and then there's obviously a lot of longs going to go in, and so be careful, because it might just come back down again. But I think it won't sweep underneath that. Will it sweep further down? I doubt it. That is too bearish, but you never know. Could be just a knife, bang, and then up. So I would place more orders here, just some orders, and but I'm looking for this one here, and then we could have that A, B, and then further down C. So it could be a nice one, or this is our mild one, A, B, C. So this is the thoughts. These are the thoughts I have anyway. So I'm pretty confident this is the area I'll be looking for. Now, if you look on the bigger time frame, you'll see if that's aligned with our. See how that's going to drop hard because of the supporting trend line. So that's going to be capitulation, guys. that is going to drop hard, and it's, yeah, you might want it until we drop this level, like I said the other day, right here. Until we drop this level, where is it? I think it was this around here. We can't be really bearish, but after that, you can see the trend line, and that's where it's going to drop. We could also have that scenario where we just bounce up and we just find a strong, take out this, and then come back down. Very possible. So we can do that. You can see how this is all resistance now. This is all resistance, strong resistance. So we had the first rejection. We might take out a bit of this liquidity, maybe. And what the scenarios that we're looking at, if it does go back up, if I can get rid of that, and it starts a hold, then yeah, we'll go back in long. But it's likely to sweep, maybe take some of this out, and then come back down, and then further down. First level of interest is there, and if we lose that, so we might go sideways, but if we lose that, we are going to go much deeper. So it's still a while to do it, but it looks like a bearish picture. If we lose this trend line, we could still go sideways for a while. And if you look at previous charts, we had a V shape. This is our inverted head and shoulders. So we were expecting highs, but it doesn't look like it's going to give it to us. Now this could go sideways, and if it holds this level and just does that, great, we'll go up more. But if we break that trend line along with that stuff there, nah. No, it's going to be bearish. Now let's look at the US dollar. Okay, so that's broken up higher than I expected. So you can see what I was thinking. It's hit the 21 monthly, I think that is. So that should act like a resistance, that level. A whole bunch of moving averages. So we passed these two moving averages. It does look bullish, guys. But short term wise, we might get some relief and just come back down here and then go back up. Something like that. This is looking bullish for whatever reason. We got this fake out, took out the liquidity there, back up again. It could potentially go down again. So this level, this bucket is going to be a strong resistance. So it could go sideways for a while before it makes the decision of going up or down. So as this is the US dollar, we need to keep an eye on it and see how it correlates to Bitcoin before we decide anything else. So this is what I have, and this is the issue I have with Tether. It looks like a inverted head and shoulders. So this breakout, if it breaks out from here, and that's pretty much Bitcoin dropping, it's going to fly up and hit that top level. And you can see previous levels of resistance. But this is a macro. If this is a macro continuation pattern, and if it breaks above it, it's likely to continue on, and then we have a significant fall. If it gets that, then we're on. But at the moment, we're in this level that's looking dangerous for us. The other thing is, I forgot to mention, is the moving averages. So I've got here a script, moving averages. If you look at this on the daily, ever so slightly, you can see which moving average is playing a role. Here we've got the, actually one more. Where is it? Okay. Here we have the red one, which is the 21 moving average on the daily. Once we broke below the 21 daily, see how it becomes bearish? Usually when you break the 21, and in here this was a 10, Yep. So when you get the 10 and 20 moving crossing over, and then eventually the 50, like here, the 50 moving average, if the 20 is already crossed the 50 and then the 10 is going to cross the 50 on the daily, it's bearish. It starts becoming bearish all the time. Here we had our crossover, and you can see what happened all the way through. Here we're about to cross over, and it's going to be, so we rejected the daily pump. It's struggling to hold, so that even the daily candle is telling us that we're struggling to get above this daily level now. So just underneath that there's a daily level, and we're struggling to get above it. So that's what's going to be important. And here will be probably support, but even the moving averages tell us that there's some bearish in here, and it supports the fact that with my Fibonacci that this is wave 5. So I'm going to leave it at that. Please give me a like and share. I'll talk to you soon.